Good afternoon, everyone. It gives me great pleasure to welcome you all today. Thank you for taking the time out of your Thursday afternoon or morning, wherever you are in the world. I'd like to introduce the Capco webinar today on Neobanks changing the game. We have an excellent lineup today covering Hong Kong, the UK, and Vietnam. And I'm James Arnett. I'm the Capco Managing Partner for Asia Pacific, and I've been with the firm for 10 years. Capco is a global financial services consultancy, managing across digital data technology and all business lines within financial services. We've had the pleasure over the last probably 5 years to build and partner with some of our clients launching digital banks around the world, both in the retail, SME and wealth markets. And we see this as an ever-changing ecosystem moving now into things like insurance and healthcare. We've got an excellent lineup, and it's a great pleasure that I can hand over now to Jack Burrows from Capco London.
Good morning to those of you with me in London and Europe, and good afternoon for those of you on the other side of the world. I'm Jack Burrows. I lead up our global venture and product building capability based out of London. And through my client work, I've actually spent the last few years launching a challenger banking proposition in the UK, Mettle by NatWest, which is a current account for small businesses and side hustlers. We were the lead delivery partner for Mettle, and I've actually done multiple roles over the last few years to help get Mettle off the ground, including being the initial chief product officer before handing over to the really fantastic new leadership team they've got there, who are turning Mettle into a real success in the UK market. In fact, we're going to hear a little bit more about Mettle as one of our examples, as one of our panelists, Charlie, who's the chief architect. Mettle is with us. But by way of introduction to today's panel, when James, Guillaume, and Melanie asked me to host the panel, I have to admit I was actually quite excited. Not as excited as I would have been if it was a post-COVID world and I could have flown over to be in person with you all in Hong Kong and soak up the crazy atmosphere. It's actually a couple of years since I was last in Hong Kong talking about the virtual banking opportunity, and my word, the market has not waited around. And it's great to have ZA and Mox represented here and a bit further afield, but in APAC, TNEX. The reason I was particularly excited about this webinar is being immersed in the UK fintech and challenger bank scene as an operator. I think it's really easy to lose sight of the really great but different fintech activity that's happening in the other markets. And I'm really hoping to learn today, just hearing from the comparisons across the different markets, and challenge some of my ways of thinking around neobanks. And I hope I won't be the only one who learns something today. Just to sort of touch on this term neobanks and what do we mean by that? And to clarify that, what I'm really talking about today are digital-only banking services that don't operate physical branches. They've probably been kicked off in the last decade or they're a greenfield spin-off an incumbent. Different markets have different names for this. In Hong Kong, I know you call these virtual banks. But one noteworthy distinction I do actually want to make at the top of the session is that they're not distinguished by their regulatory status. Some are fully licensed banks, and others are actually operating under e-money licenses or another institution's license. So really, when we talk about neobanks, we sort of mean broader than just banks, actually. And as you'll see when we introduce when they introduce themselves, the panelists today, we've really got the full gamut of the neobank variations with us today. So neobanks, with their fun mobile apps, smart features, buckets of VC money, have become the visible poster child of the fintech scene. Apparently, I've been doing my reading, I've been doing my pre-work. Apparently, since 2017, neobanks have tripled worldwide from 100 to nearly 300. My favorite stat, I'm not going to bore you with stats, don't worry, is that over the last 3 years, a neobank was launched globally every 5 days somewhere in the world. I have to admit, it's felt like every other day actually in London recently. And of those 300, apparently half of them are concentrated in Europe, where the first wave of neobanking really started actually with N26, Starling and Monzo, to name a few. But in the old world of Europe, have we been left behind? we know from our work, Capco's work in Latin America, just how exciting that market is there. And we helped launch a challenger bank there. We've also got a new bank who's absolutely crushing that market. There's lots of exciting stuff happening in North America, but it feels like neobanks are really on the march in APAC. And this is a market which has some serious pedigree in tech companies, disrupting incumbent banks, but more broadly incumbent businesses. Especially China with WeChat, Alibaba, etc. So against this backdrop of neobanks popping up everywhere, COVID was a bit of a crunch point last year. We've seen the first wind downs of neobanks, Ginger in Australia, for example. Others like Tandem in the UK have had to pivot. We've seen drops in valuations for successful neobanks like Monzo in the UK. So are neobanks a flash in the pan, or are they really changing the game? So with that, let's jump into the panel. And I'm excited to hear from the diverse set of neobanks we have with us today. So I'm going to ask each of our panelists to introduce themselves and the neobank or neobanking proposition that they represent, and then we'll get into some questions. I'm hoping we can be quite disruptive with some of the questions and have a good debate. So I'm going to hand over to Bryan first to introduce yourself.
Hi guys. So I'm a poster child. That's something that doesn't really. Thank you so much, Capco, for giving the opportunity for me to speak. I've known Capco for a long time, and they're definitely one of the good forces in this space for all things digital. As I said, my name is Bryan. I'm the CEO of TNEX. Now, TNEX, we don't like being called a bank because we do banking, but we don't want to be called a bank. We're actually a super app or ecosystem of experiences that has been built to target Gen Z and micro SMEs. In our platform, in our ecosystem, we have 4 platforms or channels. We have our financial platform and banking platform, which would be similar to a neobank. We also have our health and wellness, where we help people with their emotional health, their physical health, very much focusing on, holistic view of a person. We also have a social channel where you can chat, create groups, pay by message, divide bills, look at our merchants, recommend them. And our 4th platform is our merchant platform. And that's where our merchants are able to go digital. So our merchants, our TAM for merchants, about 4 million merchants, and they're small merchants. And for those of you who know Asia, they're those merchants that may or may not have a shop front, but we're very much there to make them digital. On our consumer side, quite interesting statistics, particularly in Vietnam with such a young population. And if we look at 2025, 15% to 20% of the workforce is going to be Gen Z. That's a total of about 20 million people. Finish up with myself. I've been about 28 years in all things digital, from sitting in California and failing back in the very start, all the way through to working in traditional banks, venture capital. I've done some investment, startups, and now I find myself here in Vietnam. We are the first digital-only platform in Vietnam. More recently, you've had emergence of other platforms, but we're standalone. We're soup to nuts digital. So we're a little bit different. But we don't talk about embedded banking. We don't talk about banking too much. For us, that's an invisible concept and of actually very little value to my customers. We talk about experience. So we talk about embedded experience, which will come out in the conversation. Embedded banking is a different perspective. So with that, I'll hand back.
Thank you, Bryan. Definitely very excited to hear a bit more about TNEX as we go through the panel. I'll hand over now to Calvin to introduce yourself.
Hi, I'm Calvin from Hong Kong. Hello, London. Can't imagine how excited you are right now. And happy to be here to share more. And I'm not alone. We have Edwin here as well. So let me introduce myself. I run the retail banking for ZA Bank. I joined ZA at the founding stage. So we probably at that time is like we only have four desks and like 12 chairs like that. So it was a fun experience to build a bank from ground up. Yes, the Hong Kong market is a bit different. Probably we are the one of the most, I would say, that's concentrated licensed virtual bank or digital bank in the region. We have 8 altogether, and ZA was the first batch that we got the license back in 2019, and we fully operated in Hong Kong 1 year after that. And now we're celebrating close to 15 months of operations. And by the end of our first anniversary, we have served over 300,000 users in Hong Kong. That's equivalent to 4% of the population. That's pretty fast growing, and compared to other adoption rate in the world, I think that's amazing as well. And that shows, surprisingly, the digital adoption of Hong Kong people that was being seen as quite conservative in taking up like fintech solution in the past. But things changed, and that's encouraging as well. And by the end of last year, we are the number one virtual banks in terms of number of users, deposit, and loans. That is where we are today, and we keep iterating, and we keep launching new product and services to serve the comprehensive needs of our users, not just for retail. We do have the full suite of banking services, including the core savings, payment, insurance, as well as the business banking side of it. So in Hong Kong, it's a little bit different market and when it comes to like banking experience or underbanked or unbanked, we will talk about it later on. So pass back to you. Thank you.
As a similar market then to London in being rather saturated, and Calvin, I definitely share the sentiment of building a bank, or in our case, a banking proposition, I should say. It has been serious fun over the last few years. Thank you. And with that, actually, I will hand over to Charlie.
So I'll give a brief update. Yeah, London is a bit busy at the moment. Some sort of sporting event happened yesterday. I'm not entirely sure what, but people seem excited. So Mettle, yes. So Mettle is a product for the passion economy. That is the far end of the micro SME sector, the sector that's wildly underserved in the UK. I've got a grandiose title of chief architect there, which really just means I've been there the longest in technology, so I've acquired that title. In reality, we work as a very flat organization, so I work directly beside engineers who are significantly more talented at systems design than I am. So I'm just lucky enough to be able to stand not even on their shoulders, but just behind them. Yes, so Mettle is totally UK focused. It is a business banking proposition, but in reality, that's just banking or payments is just a necessary evil to be able to fulfill the actual customer product that we aim at, the passion economy in the UK.
Thank you, Charlie. And Charlie, that his title is very well deserved. He's one of the most intelligent people I've ever worked with. Thank you, Charlie. And last but certainly not least, Edwin from Mox.
Hey, hi everybody. So just good morning and good afternoon. My name is Edwin. Like Calvin, I'm also from one of the virtual banks in Hong Kong. Mox is one of the 8 virtual banks. Mox is the one backed by Standard Chartered, one of the note issuing banks in Hong Kong, in partnership with HKT, PCCW, and Trip.com. And I help head up our strategy, partnerships, and corporate affairs. And thank you very much for the kind invitation. So looking forward to the discussion.
Thank you all. Thank you all for being here. So we're going to jump straight in with the questions. And we've heard already that certainly London and Hong Kong are very saturated markets. There are lots of fintechs popping up everywhere. So the question I'm actually going to pose it to all of our panelists, which is, why would a customer choose to do their banking with you and your bank or your banking proposition? What makes you unique in your market to your customer? I'm going to start with Edwin, actually.
Sure. On that question, I actually think a little bit of context is helpful, especially for people based in the UK, because Hong Kong has gone for a really bold experiment. So if people recall, it was 2017 when the HKMA talked about this smart era of banking. And in effect, what happened was in 2020, 8 virtual banks launched in the exact same time. So all within that kind of 1 year time frame. And why I say the experiment was quite bold is they didn't go for true neo VC startup funded kind of banks. They went for the Alibabas, Tencents, Ping Ans, 2 note issuing banks, ZA, which is clearly one of the very largest insurers in China. So it was quite a bold experiment. And even when we looked across the board, there weren't many markets that have gone and done this. So you wouldn't see 8 challenger banks attacking the same banks at the exact same time, or 8 Deliveroo's or 8 Ubers, etc. And obviously within this context, you have very strong traditional banks, which are kind of really defending. So for Mox, I mean, where I think we stand out and how we've built our customer base was really around our experience. So it was really about a lot of what Bryan alluded to, but how can we bring a different customer experience to customers in Hong Kong? While Hong Kong is an overbanked and very profitable retail banking segment, the actual banking experience, when we did the research, was perhaps somewhat lacking. And that was an area we really focused very hard on. The second was the partnership ecosystem that we created from the start. So a lot of people actually ask us, why the hell did Standard Chartered even start a virtual bank if you're a bank itself in Hong Kong? And it was really about how can we defend against potential disruptors and at the same time kind of really attack. So for us, we wanted to do this differently. And that's why we partnered with HKT and PCCW, which are the largest kind of telco player in Hong Kong, given we're building a phone on a bank. And then also with Trip.com, which is one of the largest online travel agencies in Asia. So that partner ecosystem is really key for us. The experience is really key. And I'd say the third one is the brand. For us, again, part of it is the buy Standard Chartered component, which really goes back to very initially when you're trying to build trust in a neobank. That element helped a lot because Standard Chartered is actually the oldest note issuing bank in Hong Kong. So that certainly helped. And then it was really about building the brand Mox and how do you make it more exciting and fun for customers.
Excellent. Thank you, Edwin. If I was in Hong Kong, I'd be tempted to bank with Mox.
Brilliant.
Let's stay in Hong Kong, shall we? And actually pass to Calvin. Why should someone do their banking with you?
I think the context that Edwin given is resonates with our starting point as well. We started with users, and actually we're not building rocket science here. Something we thought we would have to do like rocket science to serve them well, but I think making banking less painful is already a good proposition to start with. And actually, it's amazing that in 1 year time, right? We nearly forgot how it was to open a bank account. The experience would be like, you have to queue at the branches, you have to wait for being summoned to open an account, right? And now we with a mobile phone and when just a identity card, and within minutes, and for us it's like the fastest when it's like 2 minutes, and then an account can never be opened, and we are serving like 1,000 new accounts a day. So that scale and that speed and that experience is surreal to the old like a year ago before all the virtual banks here. And I think also I agree that the trust is important, or probably the trust is the hardest thing to cross when the users have to try on us, right? But I think all of us has done a good job in it, and as the first virtual bank to launch, I would say we didn't fail them. We didn't fail them. We provide a sort of a gamified experience. I think that is important for users to perceive what banking experience could be, because they never imagine that. I am happy with all the experience I had before, but okay, actually a transfer can be done in this way. Authentication can be done in this way. We might not need to go to the branch for submitting a form, or things like that. That's something, all the details that we created really build up the trust, and then the word of mouth that being preached out, and then that's important, and that's why they choose, and more people choose us to bank with.
I certainly recognize what you're saying there about it's not rocket science. When we first started, I was working with Charlie on Mettle. Actually, just the basics of being able to open an account really quickly is game changing. However, the market moves on, and that won't be good enough to differentiate in the future. So we're actually we'll lap back round that question in a minute, because I'm very interested in that. Thank you, Calvin. I'm going to go actually then, because I've started talking about Mettle. Let's go to Charlie. Sorry to leave you to last, Brian, again. I know you went first last time, so I've switched it around. Charlie, tell us, why should a small business, a side hustler, someone from the passion economy, in a very saturated market in the UK, why should they choose to do their banking with Mettle? Why are you unique?
It's a good question. The short answer is they shouldn't. But they shouldn't do their banking with Mettle, because that's not what Mettle's about. They should use Mettle to serve the financial side, or help run the financial side of their business. Banking is the necessary evil. We don't go into a bank and say, oh, what I really want is a credit card. No, I want the ability to be able to buy stuff on credit and have the agreements behind it. That's what we're trying to achieve. So that's exactly what Mettle focuses on. We focus on what is it, what product is it that these side hustlers and passion economy workers need in order to be able to run their business more effectively. And that's what we focus on. It just so happens that sometimes that requires payments, but it's not the primary focus, which I suspect probably resonates quite a lot with Bryan. It sounds like it's a similar thing. But yeah, so banking is not our primary focus. Our primary focus is very much the product that our customers need, which is a lot of UX research to understand exactly what it is they're trying to achieve.
Thank you, Charlie. And Bryan, why should someone bank with TNEX?
Yeah, guys, it's completely actually zero question here, to tell you the truth. Forget TNEX. Why would anyone want to bank? So in a population of 97 million people, there are, at a guesstimate, about 58 million people that are completely underserved or don't have a bank account. And we're talking generationally don't have a bank account. With it, you're also looking at, they have a financial index. You're not looking at London and Hong Kong. You're looking at a financial index in the low 20s. They don't even know what a debit card is. But what's unbelievably special about Vietnam is if you look at the digital obsession and the youth. So Vietnam is a massively young population, digitally obsessed. I suppose they spend on average 6 hours and 25 minutes a day. I'm going to get about 61 million people in this stat a day on digital, every day. We look at the infrastructure. There's 148 million phone subscriptions for 97 million people. There's full coverage. It's a digitally obsessed nation, but they don't, but it's a cash-based nation. So it wasn't about why would they bank with me. It was why would they want to bank? So the first people I hired weren't technologists or CXOs or anything. I hired 2 psychiatrists and 1 psychologist. And we started finding out why. What do they need? Because they don't need banking. They're totally happy. They don't need it. Okay? But what we try to work on what did they need? And we came up with, in reality, they needed second part of the sentence banking, as we talk about here. We believe that nobody in the history of mankind has ever said, I want a loan, full stop. It's I want a loan for. And our whole platform is about that second. And that could be to feed, help my family, educate, buy a house, buy a new motorbike. So our whole platform is around that. It's an ecosystem. Banking's invisible and only appears when it's required. Okay? And we beautiful banking, KYC, we're the most modern digitally native platform, you know, all the 1, 2, 3 stuff that a lot of people waste time on seminars like this, talking about microservices connected to blue, green blockchains hanging out in the back of an autonomous car. That's all nonsense nowadays. It's all about experience. The rest of it is pro forma. You can Google it. It's, you know, there's no need. You just need really good architects and leadership. So when you look at our platform, when you come on, we ask you, the first question we ask you is, how are you? How do you feel? And, you know, with emojis, you tell us how you feel. And we say, well, did you eat well? Why did you sleep well? And, you know, when you look at our first experience screen, our home screen is the experience screen. It's open, it's data-driven. We try and figure out how we can help you. It's almost like Maslow's pyramid, if we want to put it that way, okay? And it's amazing that information allows us to help. So, for example, if we see one of our customers who on average earn $2,172 a year, can't eat towards the end of the month, we send them a QR code for one of our merchants, and they can go and eat for free. Because, you know, that's the values. We're not trying to serve the banking needs of our customers, we're trying to serve the lifestyle needs of our customers. Now, in order to do that, the level of technology is rocket science in one space, in data. Okay, so my data science team is my biggest team, ably run by an amazing applied mathematician. And that's where it gets amazing. Because there's two things, CX is about localizing, okay? It's about localizing, it's about knowing the ethnographic factors, about knowing the nation. You know, UI UX is about knowing what products they want, okay? But we always start with the experience. So I'll finish up with this. You know, we have 4 platforms. Financial, it's invisible. We sell insurance. You can get insurance in 2 clicks. And we have fully KYC. We have AI-driven smarter rail payments where everything gets bigger and smaller. The whole app was built by a gaming company. You know, it was a very interesting conversation when I rang this gaming company. I said, will you build me a bank? And they went, what? So the whole experience, it's about experience. At the end of the day, our platform on emotional and physical health, there's a sprint going live today where we track your happiness, which went in a few weeks ago, and you can trend it over time against your cohorts, against your friends, and also it's tracking physical wellness, okay, and your financial wellness in the other platform. Social, you can chat. You know, people get excited about WhatsApp Pay. It's only a product. So in our chat platform, you can chat with merchants, you chat with your friends, you can create groups. And our final platform is our merchant ecosystem. And I'm really excited about this. This is one, this whole vision came very quickly about 1.5 years, 2 years ago when I was sitting on a street watching unbanked merchants, dealing with unbanked Gen Z, okay? And this is all about that chatting. They all live there. It's like the pub in the UK, And now our merchants arguably can do better digital marketing than most corporates because we deployed everything that we've deployed in Amazon, we give to our customers. So our merchants right now, they get free websites, order management. We built TNEX QR, which is a payment ecosystem. But they can also, and I was talking to the lady that I started this with, who's about 60 years of age, cooks on a fire and cooks amazing soup. But she laughs because she can send between 4 to 7 in Vietnam, nobody eats. And she's got a big bucket of soup, good soup actually. If you're ever here, I'll invite you. And she sends out targeted vouchers to these people. Come here, you ate here before, or your friend ate here, and eat some soup. So it's not about banking, guys. And in Asia, that's why the super app is king. And embedded banking will not win in Asia. And I feel it won't happen. It won't win in Europe in the long run. Okay.
Fantastic, thank you, Bryan. And I'm going to be disruptive. I'm going to try and provoke with my next question, which is, Bryan, it sounds like because your market is it's historically underbanked, you've had this great opportunity. You've really taken it bull by the horns to reinvent banking. But I look at the first wave of neobanks in Europe, especially. And I don't think they're reimagining banking. I think they are rebuilding yesterday's model of banking with better technology. So I'm going to throw the question out to the three in the saturated markets. And I'm going to start with Calvin, because you talked about just improving onboarding, which is, yes, I felt this at Mettle. Yes, that's a massive step change. But are you really reimagining banking?
Hong Kong, I think the starting point of us is different. We start with a licensed virtual bank that is the ground. Sorry, that's the playing field that we compete in. So what we can do is, of course, to reimagine every possibility within that framework. So experience, product, that's the I think that will be the playing field that we have to play with. Okay. So I agree that totally. The tool is just a tool. The needs is, nobody would like, oh, I can open a bank account in 2 minutes, then I open it every day. That's not going to work. But that is the experience. The first, why onboarding is so important? Because that is the first experience that the user come across with us. So that's why we have to build. That is the most important technology that we invested on. We have the self-developed proprietary KYC, so that we iterate on our own rhythm or iterations. And that's how we impress our customers with the first one, love at first sight. But within that framework, what we have done, I think we still have we still see a lot of possibility reimagined. For example, little things like personalization of cards number, that might be, you think might not be a big deal for user point of view, right? For product point of view, it create incremental revenue, it doesn't create incremental spend. But what we're trying to create here is how to make that card a little bit like yourself. I mean, intimate to you. Hong Kong has over 20 million of cards. That none of them really you can pick what you want. How we want to create that intimacy, that we have our first, I think in the region as well, is the first card number that first card that you can personalize your card number. That might be easy, but no one has done it. And starting from product onwards, coming for rewards, for cards it's paid by rewards. That's trivial, right? That's BAU. How can we make it a different experience? We play by. We didn't have a fixed reward scheme. Every single transaction is a delight for our customers. And you can pick a draw, you can have a captcha to see your reward. And that's fun. That excitement. People talk about it. People will share about, hey, are you good luck or bad luck? They will complain to us, saying, hey, I always got bad luck. But someone or your friends will show, hey, I got 200%. That's talking, that's social, that atmosphere is something we want to create. And that started the engagement, that started the whole viral and referral. That cycle started to create that relationship. I think this is something that we can showcase how we can reimagine the experience within something that the level playing field, I would say. I pause here and see who else would have an add-on.
At the core of your offering is you probably have a different term for it in Hong Kong, is a current account.
Oh, you can say so. It's a savings account, but okay, maybe I talk a bit about our thinking. We will anchor the user as a savings account, or you can say a current account. But in ZA, it's only one account. We don't understand why we need so many accounts. just one account, and that's the account you can use to pay, buy the debit card. That's the account that your loan will draw down, and then you can use transfer to do the P2P transfer and do bill payment. That's your account you have. And around that account, that will build on other services like insurance, right? And in Hong Kong, we need a license for as a bank to distribute insurance product, and we're the first one and the only one by far. And then we can, combining that data that we have, we can sell life insurance digitally in 3 minutes. 1 minute less to Bryan, but I think that's the point of we're building around the user with the anchor of a saving account. That's just called the trust, your payroll. That's our thinking.
Excellent. And I'm going to throw this to Charlie, because Charlie, I know Mettle is built around a current account. A current account is exactly what traditional banks offer. Do you really think you are reinventing banking?
It's built around an account. I'm going to throw it out there. Mettle's products, much like kind of Bryan's ethos, but maybe not quite as far out, is based around our understanding of our customers' needs. The banking part was purely the ability to make payments is purely a necessary evil to be able to fulfill the actual customer needs. Now, all of our product research is based on jobs to be done framework, as well as other like UX methodologies, but the basic premise being there are some key jobs that Mettle is going after, some key jobs that are the actual end-to-end goal of what it is that our customers in this passion economy are trying to get done. It turns out in those jobs, which have quite long, maybe not long time-wise, but quite complex journeys, customer journeys, job maps, if you want to use the kind of jobs to be done framework, there's steps in there that require you to be able to make payments or take payments, which means it's simply a necessary evil to actually get the job done. But the focus is on getting the job done. So are we reimagining banking? I'm not sure how much is there to reimagine about banking. If you strip that down, if I look at Mettle and consider it the proposition or product, and then I strip down we have to make payments in order to fulfill the actual product that has the actual valuable proposition for customers, or the valuable product for customers. If I strip it down to, okay, let's just put the banking in that banking box, it's payments and holding cash. It's the four functions of money: the store of value, exchange of value. The other two aren't really part of banking. What is there to reimagine around that? You can definitely do that in a different way. I mean, blockchain is a lovely way to be able to try and flatten the idea of these hierarchies and these trust hierarchies and whatnot. But the fact of the matter is, what is there to reimagine around the exchange of value and the store of value? There probably is some magic things out there that someone much more intelligent than me is going to come up with in the next 5 or 10 years. Hopefully we see it in our career lifetime. But in reality, Mettle focuses purely on the jobs to be done by our customers and happens to reverse into the needs to make payments in order to get those done. It would have been much easier to have been able to build the Mettle product without having to do payments, without that regulatory framework of payments and holding deposits, etc. Without that, way easier to build a product. I mean, you can get into much more complex hot water as well, but that would have been easier. So it wasn't a decision taken lightly, that's for sure.
A good way to provoke backwards on that question. Thank you, Charlie. I'm going to actually weave in some of the Q&A actually as we go, because we've got some really good questions that are coming in actually. And we've got a question from Robert Miles around customer bases, and we talked. We know historically the challenger banks have been quite good with the digital generation, the Gen Zs. But actually, be interested to hear Edwin from Mox. Do you feel your neobank and other neobanks can break out of just the young people to all the different customer segments?
I genuinely do, because if we look at our portfolio bases, it ranges from 18 to 80. I mean, back to the Vietnam example, 6 hours on the phone. My son tries to spend 6 hours, but we try to stop him, and my mom probably spends 6 hours just playing Candy Crush or whatever. And that's honestly, I think that's why people are increasingly comfortable with that digital lifestyle. So that's why we've actually seen quite a broad spectrum of customers. And if you don't mind, I actually want to tie it back a little bit, but this is just humble 2 cents on that thought around reimagining and rebuilding, because I loved what Bryan shared and also what Charlie and Calvin shared earlier as well. I don't know. I see as an industry, neobanks, challenger banks, virtual banks, whatever we call them, there is a little bit of similarities between that smartphone and a traditional phone, in the sense that, at some point, it's still a phone. So you can say it's reimagining or rebuilding. I do think everyone is introducing different forms of micro innovations. That's in some parts still does the same service. So whether you want to do payments, but now it's a lot quicker, or if you wanted cards, now it's personalized, or there's no number, or whatever it is, there's different forms of that. So there's definitely that kind of micro innovation that everyone's driving through, which I think customers like, but they're not like, whoa, maybe outside of TNEX where they're like, this is brand new. But at least from what I've seen so far is a lot of people they like it, but this isn't quite iPhone 12 style yet. And then I do think it will be up to the industry where once more and more customers has that aha moment, so it's beyond the, I can open an account really quickly, but once they have this aha, like now I get why this is really, really cool and I should stick with this. So kind of that whole smartphone transition, that's when we'll kind of really see the more and more people adopting it. And to Calvin's point, industry figures, it's really all the banks combined. I think we've seen about 600,000 people open accounts in Hong Kong, like 600,000 virtual bank accounts. And while Hong Kong has 7 million people, it only has about 4.8 bankable. So it's almost 10-15%. So I think people are increasingly comfortable. And even the latest round, so we've got the government trying to promote these digital consumption vouchers, all done through digital wallets. And I think it's a push that will continue to happen.
Excellent. I'm conscious of time, and there's one question I'm dying to ask. So I'm going to do it now before I forget, which is we've talked a bit about the comparison between the saturated markets and the underbanked market, and between London and APAC. I think there are things each market can learn from others, things that your market's doing really well and things your market's not doing well. So I'd be, Bryan, what do you think the more established the banking markets can learn from Vietnam?
I think we need to be a little bit careful here, guys. It's not about banking; it's about the customers you're serving. So I can guarantee you, what my customer needs in Vichy Tang Dong Da, North Hanoi, is completely different to the West End in London. Okay, and in Hong Kong, it's different. I think what they can learn is more about thinking differently. I agree, banking is a commodity most of the time. And like all commodities, be it washing powder, steel, oil, coal, rubber, it's going to go to the lowest price. Okay, that's where banking is going. And with what's happening with cloud and the ability, I built 2 banks in 9 months. Okay, I'll probably build it 6 months next time. Doesn't mean it's going to be successful, but the actual rails, the ledgers, the compliance, the payments, the cards, the channels, the mid office, all of that. So that's all pretty quick. What I think that can, what's different, guys, is now these commodities, it's how you actually orchestrate them into an experience, how you get over yourself about banking. Banking is no longer a dark art. Banking is easy, is very simple. It's how you take these and you assemble them into amazing experiences. And that's what you see Asia doing, time after time. Mox, I love what Mox is trying to do on the credit side. I think it's just really, really customer attuned. Zabank, to a lesser extent, I have other views on what's happening in China, but they do innovate. We're seeing what's happening in Indonesia as well, And also what they have, I suppose it's like this, like most great works of art or books were written in times of hardship, when you had to change. Vietnam, we have to change. So we have to innovate, because traditional banking cannot work here, because it's got an inherent inbuilt cost that makes cost of manufacture and cost of distribution stupid. There's no money. Your shareholders are going to shoot you. So I think it needs to get back to a little bit more frugality in Europe. You start to get frugal. You start to stop spending stupid money. Because if you build something that costs a lot of money and a lot of time, it's not a digital bank, because of course digital banks are defined by your ability to change quickly and cheaply. So someone rang me the other day for some advice. Oh, we've been building the bank for 2 years. I said, shut it, because it's not a digital. Okay. So I think what we can learn from here is mindset. That mindset is driven by, in my world, we have to find new ways of being made. I serve my customer in everyday banking for $1 a year, and with digitally native platform, beautiful, all cloud-based. I acquire my customer, which is where most digital banks die. It doesn't matter if it's Revolut, Monzo, they've all got the same problem, guys. CAC is stupid. And the ratio between CAC and CLV is nuts. Okay, it doesn't work. If it was a dog, sorry, I won't get, there might be some dog lovers out there. Okay, if it was a sick animal, you'd probably help it in particular. Okay, so I think it's these innovation approaches. I think what I see in Asia, even the commoditized banks, what I see in Europe, it's all the bloody same, guys. Tell me that, I really like Monzo, but what's the difference between Monzo and Sterling? It's N26. N26 is great. It's a good onboarding. I love it. I got out of it with my own businesses because I couldn't do interpays at the start. Couldn't do international. So Europe's got commoditized. What that means is, guys, if you're all selling the same commodity, it's going to go down to a price. Then it comes down to how much you can manufacture for how much you sell. There's going to be massive problems in digital banking in Europe. We're going to see the merger fail because eventually the VCs will cop on and stop feeding cash machines. And then you'll have the winners. And like you look at what the Monzos are doing, Revoluts are doing, Starling, Oak North, But in generally, it is a commodity. And if you can make it less of a commodity, and you can attune it to customers' lifestyles. Forget, no one wants banking. To reuse a quote, as we all know, no one wants banks, everyone wants banks. I'll shut up now. I was on a rant.
Brilliant. I wanted one rant. So we're going to come back to the question of profitability in a second, but Brian's throwing the punches in the APAC corner of the ring. Charlie, do you want to respond for Europe?
Give me the question again, so I don't don't go off and just complete Brian.
Well, so the question was, what is your what can the other markets learn from your market? But Brian has sort of he's gone hard on his side of the ring, saying actually everything in Europe looks the same. Monzo, N26. If you change the logos, you wouldn't know which one you were banking with. What is Europe good at, and how will what's Europe good at? What can stand up for Europe?
So I think Edwin's point actually was pretty good, which is that the neobanks in Europe, particularly the ones that we work alongside, etc. Did they really change the face of banking? Perhaps not. But what they did do is totally reimagine how you can interact with your bank. And that seems like that might sound like a relatively simple, well, that's not very, it's not much of a paradigm shift. It's not the shift from smartphones in 2006 and 7, if anyone remembers the Sony Ericsson P800s, 900s and whatnot, which were basically trying to scale down a computer with a stylus. It was a disaster, to the 2008 iPhone 3G, or in fact, the one that came just before that was a bit of a flop. That was a paradigm shift in what it meant to be a smartphone. Ever since then, we just had incremental improvements, and we had incremental improvements in the smartphone up to then, but that paradigm shift. So have they done that? Probably not. But what have they done is they've done that incremental improvement. They've changed the way that you interact with your bank. Now, turns out that's extremely important, hence the reason they've got the customer numbers that they have. Just being able to interact with your bank in a better way, in a more efficient, more effective way, is already a valuable thing. And so has Europe done that really well? I think it's done that really well because, well, at least that's what was focused on. That's certainly what all of our neobanks have focused on, which is improving the way that you interact with your banks. But have they totally changed the playing field? No, I would say that probably is the Asia market. I mean, I remember doing some projects out there, looking at the UX of interacting with payments and banking. Wow, it was beyond my mind's ability to be able to comprehend. So I think the reimagining UX, in which, when you constrain someone down in a problem space, if you give people a tweet and not a book to be able to get their thoughts across, they can sometimes get incredibly creative about how they do it. When you constrain it down to, right, if the bank's the same, but you're allowed to only innovate the way you interact with it, you can get quite creative around it. I think that is probably where Europe is ahead of the game, rather than totally reimagining what it means to do banking. Obviously, Mettle's approach is to focus predominantly on what jobs do we need to get done, rather than on the banking space. I suspect that is becoming, well, I see that as becoming way more ubiquitous across the world, not just Europe. Are we ahead or behind in that? Maybe even on the Europe side.
Definitely a theme of today is don't focus on the banking, focus on the customer, work out what the customer needs and how you can help them live their lives or build their businesses. A good response from Europe there, and I think that's sort of comes back to my point at the top around why I was quite excited to do this webinar and get to meet Bryan, Calvin, and Edwin, and actually to hear more about what's going on in Asia, because I do think Asia really is leading the way on some of reimagining, reinventing banking. Conscious of time, and I want to wrap in some of the Q&A here, and we've had quite a few questions around profitability. We've got a question from Colin Camp, and I think we had one from I can't remember, it was Murray or Robert, also asking around, you look at the big challenger banks, neobanks, especially in Europe, none of them, thinking Monzo in particular, have hit profitability. Edwin, what does success, what does profitability look like for Mox?
This again requires a little bit of context, more for I think people outside of Hong Kong. Hong Kong, when we did our research, outside of Switzerland, was the most profitable on a revenue or profit basis in retail banking outside of Switzerland. And just as an example, because obviously these are published accounts, the largest bank, the big red one, with its subsidiary, last year, even or despite COVID, made something like $6 billion US in profits before tax. And 6 billion is an enormous number. Like that is more than, if I remember correctly, McDonald's globally, or more than Nike globally. And they make that in one business line in one city of 4.8 million kind of bankable population. And I think that honestly, that is also why, that's also why there's a lot of interest in the virtual banking licenses when these were first introduced. Where, I mean, again, back to that big red bank, I mean, a large proportion of their global profits are actually derived from Hong Kong. And I do think the opportunity really goes back to, can you scratch away in some ways at some of that, I guess you can say super or obscene or very high profits. And I think that's why for us, we've really felt if you can create the right services, and it does go back to that, like if you can create like a different banking experience for these customers, you've got the basic core products, like as in you do need your deposit products, however you want to call it, or your lending or borrowing products or your wealth products. And you need those basic things, and you create the right brand that is trusted, then the path to profitability is there. It's almost, even if you can just scratch away a little bit of it, it'll work. And to be fair, it's not just the largest bank. I mean, the concentration in profit pools, and this is probably another thing that is worth sharing. It's while people think there are a lot of banks in Hong Kong, which is true, so there are about 170 banks in Hong Kong, only about 30 does retail. And out of those 30, only really 10 to 12, like for most people, even in Hong Kong, once you name 10 to 12 retail banks, you kind of lose count. Like as in, by the time you start counting bank number 15, 16, they tend to be those like single solo branches banks. And that's why introducing 8 virtual banks, all pretty big by nature, is quite disruptive to the market. And that's why for us, I've had a great journey. I'll be the first to confess, we're not profitable yet, but we're very clear. We really believe if you've got the right customer base with the right experience, with the right brand and the right products, I think we ourselves are very confident that we'll kind of get there.
Excellent. And I'm afraid we've only got time for one last question. I'm going to have to ask this one because a few people have asked it in the Q&A, and I feel this one to Calvin, which is the as Edwin says, there's a big red bank that's making a lot of money, is going to want to keep making a lot of money. The neobanks that are represented here and others have moved the needle. I don't think that's disputable. To move the needle in terms of customer experience. But the big red bank and the other banks are catching up quickly. Can you go fast enough? What is going to make you succeed, and what is going to make neobanks succeed compared to the incumbents?
Right. Should I use this? I'm not sure how many of you heard about the dead horse theory. I think the clear answer to this is, it's hard to transform something, right? It's, you know, hard to catch up, right? I think what we have done, we have demonstrated the speed to build something. Maybe at the, I came from the incumbent background as well, right? So we all know the speed of, launching a new product versus the speed of like the virtual banks had launched a new product. The whole cycle has been transformed in that sense. It really, I used to say, what will all the virtual banks bother the incumbents the most is having the news updates from PR sending, hey, someone launched a new product every day. You have to do all the competitive analysis. And you have to do all this counteracting strategy workshop. That's the most bothering part of virtual banks at the beginning of time, because we launch new things every month also, right? And you have all the players coming in. I think that speed is something that really differentiates us, if you ask me. It's not about technology. Technology is not about how the fancy the UX is not. It's about how we can execute the speed and demonstrate the speed. And it's driven by the people, the mindset, the culture, and the whole organization culture, and the operating processes as well. Not just the UX, that the top layer. It's because of how you communicate with the risk, compliance, the appetite, and all this thing come together, make decision fast, and responding to the users, accepting the failures, and we try again, right? So we be transparent, and the branding as well. And it is the whole thing. I think it is totally different. The way that we work, the culture that we build, the assembling the same group of people working toward the same goal is not easy, but it's most differentiating. That's my view.
Thank you, Calvin. I think we've heard that actually a consistent theme, and definitely resonates for me when we were building Mettle, the need for speed. I think need for speed, the ability to have speed compared to the incumbents. And the other thing we've heard today is from everyone here actually was the just relentless focus on customers and understanding what they need to do and how banking, if I say that dirty word, how banking can support them. And that's what will differentiate. I think we've run out of time, so I'm going to wrap before I hand up to James and say thank you from me to Bryan, Calvin, Edwin, and Charlie for joining us on the panel. I've really enjoyed it. I've learned from today and from preparing for this a huge amount about the exciting stuff happening in Asia, and Charlie again for standing up for Europe. Thank you. I'll hand over back to James to wrap now.
Thank you, Jack. So thank you everyone for joining today, and Edwin, Bryan, Calvin, Charlie, excellent panel, excellent discussion. And I think my leaving note is focus on your customer and plan to build your super app. So, and on that note, have a great day. Thank you.